Good afternoon, guys. It's Working, bringing you a quick update on Bitcoin. Hope you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar. This is the 4-hour chart on Coinbase. And I apologize, guys. I wasn't able to give you guys an update over the weekend, especially when we had some movement there. Yesterday, I was tied up with family and whatnot. But Bitcoin, in my last update, guys, I told you guys we were sitting right here moving sideways. I told you that Bitcoin looked like it was getting ready to move. We had our moving averages converging as we discussed. We had Bitcoin creating a overall this larger structure, creating a series of lower highs and higher lows. As I pointed this out last time. We saw this here. It was respecting this descending resistance line. Of course, we had a hit here, hit here, hit here, here, and then it was just following this descending resistance line all the way down, as I showed you guys last time. And then, of course, we had a series of higher lows coming up. So we're converging right here towards this apex, and we were expecting a larger move. Now, on my last update, which I think was on Friday, I believe, I told you guys that looked like that move could come in the next 24 hours. I was off by about 48 hours or so, but clearly we've seen that nice break up at this point. And if we zoom in here, guys, I told you what I wanted to see the price take out was this prior high, this little juke right here. I told you if we could break above this prior high here, we were very likely to break up above this little wick right here, and that's exactly what happened. And we had noticed, in fact, the market gave us a little heads up on this move and gave you an actual opportunity to enter this trade if you hadn't already bought down here. We had this little fake out right here where price jumped up, and as soon as we broke that line, as soon as I told you guys last time, this was the resistance that had to get taken out. Again, we're looking at Coinbase, and Coinbase that was sitting at around 36.50, but depending on varying on your exchange, the price will. But this little order structure back here, this is what we were watching. As soon as that was taken out, even though it got rejected back here, I would have placed buy orders right down here. We had this ascending support line on this little microstructure down here, creating a series of higher lows. As soon as price came back down, retested what was this support down here, that's knowing that it had taken out this and softened up this resistance. This is where I would have gone in, entered into a position. And I know it's easy for me to say that in retrospect, in hindsight, but hopefully if you guys have been listening to me, you kind of picked up on that when I told you that we needed to break out this resistance area right here. And when we did, that would be your signal that very likely price was going to come in. Now, the good part about this was, as I said, is price came back down, hit this, took out that high, came back down, gave you an opportunity to enter. Now, we've seen this before where we get this fake out. So if you didn't buy here, by all means, guys, I'm not saying that was you were foolish not to. I didn't buy here because I wasn't paying attention. I was with family yesterday. But had I been watching, I believe, I'm fairly confident that I would have. But I would have had a very tight stop loss as well. This wasn't some obvious sign, but it was definitely a good signal to try that we had taken out and softened up this resistance. Because remember, every time a resistance or support gets tested, that resistance or support gets weaker and weaker. So we came up, took out that high. That was a good time to come down here, enter into a small position here, and then of course it came back up and just crushed right through the prior resistance as it was softened up. So this was a good entry point. The question is now, are we going to continue up? We came up, we hit the top of this known resistance area here at 3,800. I've had this area marked out here between 36 and 3,800 for quite some time, knowing that this area was going to act as a decent resistance area. But again, we've slightly taken out that resistance here by jumping up by just a wick. And the question is, are we going to continue? Well, let's take a look at that. Let's come over here. First thing, what do I always tell you guys? Anytime you see a major move, we know that there's a lot of manipulation in this market. And so what is king? Volume is king. So any move needs to be backed up by volume. All right, so let's come over here and let's check volume. Volume sitting for today is sitting at 8.8 billion. That is a nice jump, guys. We've had, if we could just come back here and look over the past few weeks, we've been sitting at 5 billion. We had that spike on February 8th where we got up to 7.7 billion. And that was a decent spike, and then it kind of just we kind of had that volume rolling back, and we're sitting at 6 billion, 6.2 billion, 6.3 billion, back to 6 billion, back to 5.9 billion, and then yesterday we had that jump from 5.9 to 7 billion, and then from 7 billion yesterday up to 8.8 billion today. That is a nice jump, guys, in volume. So we are getting some follow through in volume. Now, as I always tell you guys, we've seen volume like this in the past, but it hasn't really followed through. In other words, we've seen spikes and then it just drops off. So what I'm going to be watching very closely is to see if we can maintain this volume over the next 48 hours, and if we can, that is going to be an extremely bullish sign. Now, I always tell you guys, in order for me to say that the bottom is in, I need to see daily volume on a consistent basis above 10 billion. If daily volume on a consistent basis, by a consistent basis I mean at least over a week period, at least over a 7-day period, or above 10 billion, then I'm going to know that new money is entering into this market. I'm going to know it's not nearly as easy to manipulate because we have that volume. We've got a lot of people entering into the market, making it a lot more difficult to manipulate. And we know there's been so much manipulation in the past, guys. But looking in the past here, when we've had major spikes, let's go ahead and correlate that to volume here. We had this major spike back here on December the 15th, where we had this little bull run where we went from 3,100 or 3,150 all the way up to about 4,200. Again, I'm looking at Coinbase. Those prices will vary depending on your exchange. But we had this major move up that started again on December the 15th and ended around December the 23rd. So let's go ahead and correlate that to volume. December the 15th through December the 23rd. Look at the volume on those days. With that major move, we were at 3.5, 3.7, 5.4, 5.9, and then we had that spike up to 8.9, 6.8 to 8.9, and then 7.2, and then it slowly started trickling back off again, guys. So we did have the volume up to about where it is right here back in December, and then it just fell right off. So I point this out, guys, to say, yes, we have seen a major move. It has been backed up by volume. All of that is extremely bullish. One of the reasons that I like this move more than I liked this move back here is this was just basically straight up. We had little dips here and there, but basically straight up. Here we had a nice move where we came up and then we just moved sideways for, let's see, about a little over a week. Just sideways movement for a little over a week, and then we came right back up. Not only that, pardon me, guys. Not only that, but we are also seeing a logical area for price to bounce. What do I mean by that? I mean, we're seeing, if I go here, swing low, swing high of this smaller little microstructure here, what do we see? We see it bounced perfectly right there off the 50 and then continued right back up. So again, a nice logical bounce right off the 50. We're also seeing some structure even with this double bottom that we saw right here. Let me go ahead and pull up the daily chart so you can see this a little bit better. We had this major move, and then of course we had that sell-off, but the sell-off came in the form of this descending triangle, which is a very bullish sign. We had that breakout from that descending triangle, and we talked about that as this was happening. And so we had that breakup. So we had this nice double bottom here where price hit here, came back up for about a week, a little over a week, came back down, double bottom, and then we took off and broke right out of, I mean, just a textbook break out of this descending wedge here. And this double bottom took place. It wasn't just an area of known support where, we can see it was support back here. We had it drawn out here for a very long time, right there at that 3,400. But that 3,400 also correlated nicely. If we go swing low, swing high of this overall structure, we can see just almost a perfect hit right there off the 786. So again, guys, we're seeing some structure into this market. We're seeing where price took off, came back down, double bottomed right off the 786 fib, came right back up out of a descending wedge, backed up by volume, came back up, pulled back only to the 50, didn't even get a deep pullback, so only pulled back to the 50, and then had a nice spike right back up again. So this is, I mean, we're almost, I don't like Elliott wave in low volume markets, guys, and we are certainly looking at a low volume market. But if I just eyeball it here, I mean, we just look at this as an overall possible, 1, 2, coming up for the 3. This could be a possible third wave. And if that is correct, we know wave 3 is often the longest, often the strongest. We can see that we had, a nice five-wave pattern up. We'd have to dig down into the hourly to get those nice 5 waves, but it's certainly there. And then if we look over here on the chart, we can see from that high here, we had a nice little A, B, C coming down. So yes, and again, guys, that's just me eyeballing it. I am not, I'm not saying that's a perfect count by any means at all, but it's there. The structure is there. We're starting to see things in the market that we haven't seen in quite some time. Now, does that mean that this thing is going to take off? I'm absolutely not convinced of that at all yet. Now, even though this is looking healthy so far, I'm extremely skeptical, and I will remain very skeptical until price, at least in the short term, we need to break up above this 3,800 decisively. We had a nice little wick here. I need a decisive break, at least on the 4-hour, above that 3,800. By decisive, I mean a 4-hour candle, both opening and closing. Again, not just opening, not just closing, but both opening and closing above that $3,800 resistance on Coinbase. We wicked above it here. I need a decisive break above it here with some at least consolidation, if not a continuation up. That'll be a short-term trend where I'll say, okay, maybe this thing is going to come back up here and hit this $4,000 to $4,100 resistance. But this $4,000 $4,100 resistance is going to be key in my opinion. Why do I say that? Let's come back out here to the daily chart. Looking at the daily chart, guys, we can see if we pull back here, and I showed you guys this before, but since let me just kind of zoom way back in. Since we had this major breakdown, and let's call it, that major breakdown really was what really took place when we broke down below that 5,000 mark. So really, we broke down here. That was our first sign: consolidation, 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 and then it just tanked. So this was our real breakdown. So where did we have our first consolidation from that major breakdown? Well, it happened right here, right in this order structure here. We consolidated for 3 days, really 4 days, and then continued down. So if I use this, and we see we had, let me zoom, blow it back up here so you guys can see a little bit better. And we see we had this nice long wick right here, guys. So a definite attempt by the bulls to stop the bleeding and push it back up. They were able to at least delay it for a couple days, and then the continuation down continued. So using this as our temporary pivot low, pivot high, and then continuation of the downtrend, this being our pivot high, we come over here and we draw our fib. And I know I've shown you guys this before, but for those who have maybe forgotten or haven't seen it, we go swing high, swing low. And what do we see? We can see that all this order structure right here, where price broke down, temporarily broke back up, tried to act as a little support, and then just completely collapsed. All of this order structure here, and since it had broken down here decisively, came back up, tried to break above, was able to wick, but the bears were too strong, pushed it back down, came back up, attempted again to break above, wick, 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 and then just crashed right back down. So we can see that coincides almost perfectly. All these order blocks trying to break above coincide almost perfectly with that golden pocket between the 618 fib and the 65 fib level, also known as the golden pocket. So that is the area, in my opinion, that we need to break above. On Coinbase, that correlates with about 4,100, 4,120 to 4,000. That area right in here, that's the area, that's the resistance that we need to decisively, again, not by a wick, but decisively break above. And by decisively on this, looking at the larger, this being a not a microstructure, but this being a larger structure here, by decisive, I need to see not a 4-hour candle, but a daily candle, both opening and closing above that 4,120, above that golden pocket, for me to start getting a little more bullish, and for me to start saying the bottom might be in. Might be in. I'm not saying it will even be in at that point, but I will start to get extremely optimistic if we can break above this zone with volume. If that does happen, guys, that, in my opinion, guys, will be a very, very good sign that you may definitely want to start seriously considering dollar cost averaging in. Again, that's not where I'm not telling you to throw all your money and have a nice long position at that point here, but you will definitely want to. I'm already starting to slowly dollar cost average again here, guys, with this larger move here for adding to my long-term portfolio. Of course, I'm day trading this as well, which has been very, very tricky, but it's worked out fairly well so far. But for those of you, I know not everybody is a day trader, guys, and most people aren't, and it's certainly best to know your limitations. I certainly have learned the hard way in the past what mine were. So you definitely want to know your limitations, respect your limitations. But all that to say is, if we do break above that 4,120, guys, decisively, again, not by a wick. So we can, if we see this thing wick above here, and we're even up to 4,200, and Work and said it broke above 4,120, there it is. No, I need to see a decisive break. By decisive, I mean a daily candle, both opening and closing. Not a break above, but a daily candle breaking above and then opening and closing above that 4,120. That will be a decisive break. And if that does happen, I do think that's going to be a very good sign to definitely start dollar cost averaging in for the long haul and start adding to your long position if you're not already doing that. So, okay, let's go ahead and start looking at some other things and see what we can see. All right, looking at the daily daily chart, looking at our moving averages, exponential moving averages. I told you guys last time that this 50-day moving average was acting as a very, very strong resistance. Came here, we broke above it by a wick, pushed right back down, and then for the last week, little over, we've been trying to break above, and the Bears have just kept rejecting it over and over and over and over and over and over and over again. And then finally today, we just decisively broke above, and that's the kind of breakout you want to see, guys. That is a nice breakout. Now, again, we haven't closed above there yet. So again, I told you a decisive break on the 50-day moving average is a daily candle, both opening and closing above this 50-day moving average. So now we've had a daily candle open. Let's see if we can have a daily candle close above that 50-day moving average. If that does happen, I do believe that's going to be a very, very good sign of at least a nice temporary continuation to the upside. Doesn't mean that has to happen, but it's a very good sign. I also like the fact that this 21-day EMA, which I always tell you is a critical sign on the daily chart, was able to hold off as support, and we didn't even break through that 21-day EMA. The Bears weren't even to push it. Weren't not even able to push it below even by a wick. That 21-day EMA held as a very hard support. That is a good bullish sign. The fact that we had this 8-day EMA break above the 21-day EMA, and with the day that happened, I told you guys, even though we saw a little bit of a pullback here, I told you guys that was a very, very bullish sign. Again, we're looking at the daily chart. That was a very, very bullish sign that that 8-day EMA broke above that 21-day EMA. That is a very, very bullish sign of a possible momentum shift, at least in the short term. And of course, that turned out to absolutely be true. That isn't always true, but that turned out to absolutely be true. That is one piece of the puzzle. That is one indicator that you want to keep an eye at. That's when my eyebrows started going up, when we had that break above that 8-day EMA broke above that 21-day EMA. So again, guys, these are all looking at bullish, or all very, very bullish signs, at least in the short term. I'm not seeing anything in the long term to suggest that the bottom is in, but in the short term, that this is a very bullish sign, and this could lead to a bull run, especially, again, volume is king, especially if volume continues to increase. All right, let's look at longs versus shorts. Shorts, as expected, are falling off the board here because we've had this nice little break in price. So of course, we're seeing a lot of short positions get liquidated, get stopped out. So that's not unexpected. I'm going to be very interested to see how this ends up playing out here, guys, especially given the fact, especially if volume remains high. What, again, another bullish thing that I like about this is, guys, we had longs stacked here. Longs have been stacked. Shorts, while we had this little bit of an increase, shorts longs have been outpacing shorts greatly over the last few weeks. So market makers had a lot of incentive. In other words, those people that are manipulating this market, and make no mistake, guys, this market has been manipulated for a very, very long time. And the lower the volume, the easier it is to manipulate. And relatively speaking, volume is still relatively low, even though it's increased fairly substantially in the last few days. It's still relatively low. That being said, the fact that price was able to break up above, even though longs were stacked in relation to shorts, is again in and of itself a rather bullish sign. Now, there's a lot of mind games that go along here, guys. I mean, it's not like it used to be, where traders are just foolish. Going all the way back to let me go ahead and pull up 2018, or yeah, all of 2018. Let's go ahead and look at the weekly chart here, guys. Going back to 2018, market makers have been able to greatly manipulate this market, guys, because we had a lot of guppies in the market. In other words, everyone was so bullish here. Everyone thought that every little spike here was going to be a new all-time high, and so market makers just played that. Price would drop down here to almost nothing. Everybody was selling. Market makers scooped it up at the bottom. They drove price up. As soon as all the guppies started buying again, market makers dropped price and took their money, and all the guppies got stopped out. Once again, the market makers pushed price up a little bit. All the guppies started buying back in, and of course, market makers tanked it, took their money, and they all got once again took all the guppies' money, and price fell off. This happened numerous times, where over and over and over again, to where eventually price got the trend, or this overall series of lower highs and not really higher lows, but this bottom floor of 6,000. It got so consolidated here at the end where you can see there was just no more guppies in the market. No, every time price started going up, you had less and less people that were willing to buy that spike because they had been burned in the past, until eventually nobody was willing to buy that spike and price just collapsed. That was inevitable. And so I point this out as I say it was easy for market makers to manipulate price here and just take people's money. It's a lot harder to do that now. Why am I pointing that out? I'm pointing that out because market makers know that. They know that it's a lot more difficult to take people's money. So they need to bait you into buying the bait needs to be a much more enticing bait. And right now, people have been looking for that bottom for so long that yes, the fact that we've had this breakout, the fact that longs were stacked, and still price was able to break up with this nice bullish looking move. That entices a lot of people. It's enticing me. I mean, I'm watching this saying, yeah, maybe this is a bottom. Maybe this is. Now, I having gone through, when I was initially getting into trading, having been burned so many times, I'm not, I'm you never want to. You always want to have a stop loss, and you never want to enter. You never want to risk more money than you can afford to lose. Just stick by that basic principle, and you'll be fine. So I'm still mostly just day trading this. I've added a little bit to my long-term hold portfolio, knowing that if price does come back down, I'm going to continue to hold it in that long-term hold portfolio, and I will just get stopped out on some of my day trades, and that's no problem. I'm used to that, guys. As long as you win more than you lose, then you're up. But a lot of people are going to, especially those that are just getting into this market and looking at and thinking this is a good time to buy. They may get fooled into getting caught up in the FOMO of this, thinking the bottom is in, and market makers may just turn price right back around and tank it right back down to that to those lower levels, that even $3,000, even lower than that. And remember, guys, if we come out here and look at the weekly chart, I've showed you guys this in the past. Even though this is a nice bullish move here, if we come out here and look at the weekly chart, this is still just a little blip on the radar, guys. It really, really is. Now, we've had this series of lower highs here, and we've kind of broken that descending resistance line, guys. We've kind of broken our way up here, and that it's not something to shake a stick at. We've also broken our way up above that 3,600, and I told you guys that 3,600 was a very key zone to break up above, and we've done that now on the weekly chart here, and it's looking like a possible bottom may be in. We've had a higher low here. So yes, this is definitely getting my attention. I'm definitely not telling you that we are coming down to lower prices. This could be the bottom, but what I'm saying is be very, very careful, guys. Just be very, very careful, because even though that we've seen that volume spike very substantially here, relatively speaking, compared to what it has been is such low volume, and is still, relatively speaking, fairly low volume, that this is still ripe for manipulation. And until we decisively break up above that golden pocket that I just discussed earlier there, guys, that 41.20 on Coinbase, I'm still going to remain very, very skeptical of this move. And just because I'm skeptical, guys, does not, again, I want to emphasize this. I am not telling you that this thing is coming back down to these lower lows. I'm telling you, just the market is still ripe for manipulation, even though we've had this jump in volume. So keep an eye on volume, guys. And if volume can continue, and if we can decisively break above at least this 3,800 in the short term, but in the longer term here, breaking above this 41.20, not longer term, but in the bigger picture, breaking above this 41.20, that is the key area to get above, in my opinion, decisively. If that does happen, guys, that's when I'll start to get excited. So am I advising you to buy? Well, I'm not giving you any financial advice at all. Personally, yes, I've entered into a small position. I bought down here as it was bouncing down here at 3,500. I told you I entered into a small position here. I've not sold that position yet. I'm tempted to sell my investment and let the profits ride. I may end up doing that here. I do think if you have not entered into this yet, it is a good time to start watching the market and looking for an entry point. What would be a good entry point? Well, I do believe it looks to me like we may see we've already seen a little bit of a pullback here. We saw price came up here on Coinbase to about 38.30, and it's dropped back down to about 37.95, 3,800 as well, and that's where it sits right now, seeing if we can decisively get above that $3,800 support. But it looks to me like we may see a little bit more of a pullback. May not, but we may see a little little more of a pullback. I say that because if we come over here and we look at, again, this is on the daily chart, we come over here and look at our MACD, and we look at that in relation to price. We can see as of right here, price obviously created a higher high point to point. If we look at the same exact point on the daily MACD, looking at the histogram, we can see what do we have. Let me get rid of that. We can see what do we have here. We can see that price created, or excuse me, the histogram created a lower high. So that is bearish divergence, very slight bearish divergence, and we're not seeing it on the daily RSI, but nonetheless, that is bearish divergence. So that would suggest a possible temporary pullback. Nothing significant, but a possible temporary pullback here. And we may have seen that. We had that, as I said, we had that pullback of about $40, $50 or so. And so that may have been it. That being said, it is on the daily, so it looks to me like we may see a little bit more of a pullback. I'd be looking for an entry point possibly somewhere around 3750, 3700, even if it comes back down there to that 3700. What was resistance, which again was sitting right around 3650, 3700, should act as support. So if we come back down, retest this prior high around 3700 or so, we should get that, should act as support, and then we continue up. If this thing is to continue up, I'd have a tight stop loss though. That being said, I'm coming over here and looking at the 4-hour MACD. Same thing, just on a little larger scale. If we look at the 4-hour MACD, and I'll even go all the way back to the wick here. On this 4-hour, obviously price created a higher high. We look at the 4-hour histogram. What do we have? Obviously, the histogram created a lower high. Again, bearish divergence, again suggesting a possible pullback here. Now, again, we've had a little bit of a pullback. That may have been it. And if you want to slowly start dollar cost averaging in, that's not a bad idea. But I wouldn't go all in here. I'd maybe stack a little bit here and stack your buys all the way down there to about that 3,700 level, and that's where I'd look for a decent entry point if you are looking to play this market. If you want to play it safe, if you don't have money to lose, if you do want to play it, but you do have a little bit, or if you just have a little bit of money and you really want to protect your fiat, I would wait until we decisively break above that 4120 on the daily, and at that point, that's where I'd slowly start dollar cost averaging in with the money that you have available to buy Bitcoin. All right, guys, I went a little bit long today. I do apologize. I felt like we had a lot to cover. Hopefully you didn't find it too boring. Hopefully you got a little bit out of this, guys. But yes, right now we are seeing a lot of bullish things in the market, guys, but just do not give in to FOMO here. In other words, yes, the bottom might be in. Yes, this thing might take off. Hindsight is always 20/20. This thing might also turn right back around and tank. I know that's frustrating to hear from an analyst, but I'm just being 100% honest with you guys. We do not have all the answers, especially in the crypto market. This is one of the most difficult markets to trade, bar none, especially recently, guys, without any kind of a trend to go off of. So yes, we are seeing some very good bullish signs, guys, some things that we haven't seen back here. So that is a good sign, but we are still ripe for manipulation, and until we break above 4120 with good volume, and until volume consistently remains above 10 billion on a consistent basis. By that, I'm defining as at least happens over a week. Until that happens, I'm going to remain rather skeptical. Doesn't mean I won't trade this, but I will remain rather skeptical that this thing might not come right back down and bite us, because it's happened so many times in the past. Again, that being said, we are seeing some very good signs in the market. So I'm going to go ahead and wrap things there, guys. If you have any comments, questions, suggestions, please let me know in the comment section below. As always, would appreciate an upvote if you have enjoyed this content. Till next time, guys, please trade safe, take care of yourselves. This is Working, signing out.